Good morning, investors and traders. This is Naim Maslam, and welcome to our live video session on our YouTube channel, in which we really try to filter out the noise and discuss fundamentals that really drive the price action. Now, a bit of a housekeeping as always. If you haven't subscribed to our channel, please make sure that you do so, and because that will really help you to get all the notifications on the daily basis, and more importantly, you can really get involved, get yourself engaged during this conversation, and ask me any questions while I am live on here. Before we do anything else, it is important that I just briefly go through a disclaimer. Anything which will be discussed cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, folks, in today's market, what we will be discussing, we'll be discussing the equity markets, we'll be discussing, of course, the Forex market and cryptos, commodities as well. But more importantly, what I really wanted to discuss with you guys is the calm that we are seeing in the market ahead of the big storm that could be hitting the market very soon, because the signs have really started to pop up. Do you know which storm I am really talking about? Do you have any idea in relation to that storm? Because if you do, please make sure that you type it over here, and then see that how much are you tuned in with the market in relation to that. Now, starting today, the Federal Reserve is going to have its meeting about the interest rate. So the Fed, in very simple English, is going to decide about its monetary policy. And as that this situation is completely different in what we have today and what we experienced back in December. How so? Because back in December, with the US economy was really in a dire situation. And secondly, what we were also seeing at the time was that, we had the second coronavirus wave really hitting that. The third coronavirus wave really hitting it, and the numbers were really going up, and the vaccine progress wasn't that. Vaccine was at a very early stage. Now, we are looking at a situation where we not only have the vaccine recovery, because now more than 20% of the population has already got vaccine over in the United States, which is very, very positive. And the restrictive measures which were very much put in place, they have also started to roll back on that. And thirdly, the most important one, we also have seen another US stimulus package worth $2 trillion, has also, so $1.9 trillion literally hitting the economy as well. And this, for over the next 10 days, the US is also going to see 100 million stimulus checks. And remember, each stimulus check is pretty much $1,400. Now, investors and traders know that these particular stimulus checks, which are going out to Americans, they are going to use this money to invest in two different areas. Number one is your stock market. What do you think is the second one? What do you think where Americans are really going to put their stimulus money, the stimulus check money that they're going to really get? Do you have any idea that where that money is really going to go? Because if you do, please do put it over here. Do you think they will invest in gold? Do you think they will invest in oil? Whether do you think that they can invest in Bitcoin, or whether do you think they're going to invest in certain other coins? What do you think? I've already mentioned to you guys that they are going to invest this money in stock market. And I've done the article that the estimation is literally 190 billion worth of that money could be going towards the stock market. But what do you think is the second area where Americans are really going to put this money? Right. So Americans are highly, highly likely to put that money in Bitcoin. So the current retracement in the price, or the current sell-off that we are seeing in the Bitcoin price, is really an opportunity. How come is that is an opportunity? That isn't an opportunity because Bitcoin prices are going down, obviously, from its record high, which we saw the recent weekend when it crossed above that, nearly touched 62,000. Now it is trading in around 53,000. So the cheaper it becomes, someone says it's going to go to Cardano. Well, Cardano is a good project. I really like Cardano as well. Okay. So yeah, Bitcoin is really good, and thank you for putting that out there. And that's really great. So going back to the topic, that the lower the price it goes, the more motivation Americans are really going to have to put that money towards Bitcoin. Why? Because they know that this technology, the current bull market that we are seeing in Bitcoin prices, is highly likely to push Bitcoin prices all the way to 100,000. By the way, earlier today, over here on this channel, I've done the technical analysis on Bitcoin as well. So if you haven't seen that, please do so. Why? Because we talked about some really great opportunities there. The negative divergence between the momentum indicator and the price that really calls for a caution. And secondly, few different opportunities where you could really find those entry points if you are not already in, or if you wanted to add further into your position, because the bull momentum, the upward trend, is still very much in place. So have a look on that, and then do put your comments there. And then once again, guys, if you like it, please do click like, and do share the content as well, because it really helps us to get into Google's algorithm, which are very, very important. And moving on from here, going back to the Federal Reserves. So right now, what we're already seeing is that the stock market is moving to the upside. The Dow Jones Industrial Index made another all-time high, and so is the S&P 500 index. And when we look at the Nasdaq, remember we talked about Nasdaq, is how Nasdaq is a great opportunity to buy. Again, the link is over here for you to have a look on that as well. And in our previous video where we've done the technical analysis on Nasdaq, and how that is a great opportunity to get involved in. So Nasdaq has also started to move to the upside as well. And on the daily time frame, what I really see with respect to Nasdaq is that it is moving above the 100-day simple moving average. And for me, that is really, really great. That's a good point, because what we want to do, and what we do over here, is filter out the noise from the price. And the price is moving higher, but the storm could be brewing on back of that. And what I mean by that is that tomorrow we are going to get the Federal Reserve's decision. Now, we know one thing pretty clear, that not all the Fed members are on the same page. So there is something called dot plot, and that is just literally the different members of the Federal Reserve Committee projecting where they see the interest rate moving in the coming years. So that is really going to drive the conversation, and that will really tell the market that the Federal Reserve, if the Federal Reserve is about to, tighten its grip on the monetary policy, is it going to reduce that asset purchase program that we are seeing? Is it going to increase the interest rate, and when that can really happen? And remember, that is going to bring enormous amount of volatility. The reason that I am smiling is because that is an opportunity in the Forex market. Look at the euro dollar, that is heavily in it now. And with respect to the dollar index, the bets are that we will see more surges in terms of dollar. So that means the euro could continue its downward journey tomorrow. And that is an opportunity because when we see this surge right now, we're seeing this upward momentum in the euro dollar. So you could really go in and start selling that. So you'll be selling into the downward trend. So you'll be selling the small rallies which are happening in the downward trend. So otherwise, if the narrative is changed, then you can quickly flip the position to the upside, because that will really assure that that the Federal Reserve is not worried. And let's just remember and recap one thing: the Bank of England, the ECB, the Bank of Japan, the Federal Reserve, all of these banks have very much confirmed that inflation is only transitory, meaning it's only a short term. They're not worried about it. And the belief is that the market is getting ahead of itself in relation to that. The market is thinking inflation is going to go too much, but the central banks do not think that. So that is where the difference is. And in relation to, especially with respect to the European Central Bank's policy, if you want me to explain a bit more on that, we can do a special video on it, covering the euro dollar in a lot more detail. So put a comment over here, and then I will certainly come back to you on it. Now, in relation to gold prices, what we're really seeing is that, yes, the momentum is still very much maintained. Now, when I look at the gold price chart on the 4-hour time frame, I still see the price challenging the 100-day simple moving average, and I'm really waiting for the price to flip to the upside on the 4-hour time frame, meaning the price just needs to go above the 100-day simple moving average, and it needs to stay above it. And that means we are going to see the price moving all the way to 1781 in terms of a target, as long as the price continues to stay above the 100-day. Right now, I am seeing a lot of resistance in terms of gold prices, and it is telling me that perhaps prices are really finding it difficult to break above that price point. This is all for now. Keep an eye on the Federal Reserve meeting, and in terms of economic data at 1:30, well, 12:30, because now there's a less difference between the US and the UK time. So 12:30, we're going to get the US retail sales number, and that will also bring more volatility in the market. That's all for now, and I'll see you guys same place, same time tomorrow. Bye-bye.